Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, we've had another interesting week in the market, as well as another interesting week with the weather patterns that are about to hit Florida and up into Atlanta, Georgia, and possibly beyond. You know, it wasn't too long ago, just a couple of weeks ago, I was even forecasting Hurricane Harvey and what it would do, not just to the weather patterns, but what it would do to the markets. And interestingly enough, my forecast for the markets and the hurricane forecasts were exactly right. So what I'm going to do is really review what we talked about last week on the weekly market report. And as you can see here, I've left my lines in place like I do always, so you can see how the market panned out. This was last Friday right here. And I said that on that red candle, there was a good chance the market would drop, which is why I drew this diagonal line in a downward direction. I said the market would drop, with the end of that line being my target. And I said that the reason I thought it would drop is because there was a gap right here. And once a gap fills, like it did back here on Friday, there's an 80% chance that the market will reverse from that point. It's very predictable. 80% is a good percentage, and gaps really follow the rules very nicely. And for traders, if you know how to read the gaps, it's basically money in your pocket. So when a gap is open like it was here, there's an 80% chance that the gap will fill. Once it fills, like it did, there's an 80% chance that it'll reverse. Hence the reason why I drew this line in that downward direction. So you can see we hit my target exactly right here today on Friday. We reached that target, and now we have a green candle. So what does that mean for next week? Let's erase that line, and I will then draw your attention to this gap. Remember, Monday was closed for Labor Day, so Tuesday it gapped down, Wednesday, Thursday, Friday. So this open gap is now going to act as another price target magnet. So I'm going to really extend this up here as my point of resistance. I'm going to take my drawing tools right now and draw a diagonal line in an upward direction, because I think that the market could actually move up to fill that gap. Once the gap fills, we'll see what happens the week after next, and maybe it'll pull back from that point. But right now, my forecast for the diamonds is that we will start to move up. Okay, let's move on to the spiders. Ticker symbol SPY. This represents the S&P 500 ETF, and you can see same thing. I said the market would drop. This was on Friday, right there, on Friday the 1st. We had a big red candle on Tuesday. It continued lower. I think that the spiders could still go down just a little bit, and what I'm going to do is draw a little bit of a bounce line there. I think we're going to go down just a little bit, and then I do believe, like the diamonds, we're going to start to move up to fill that gap. Ultimately, I'm still bearish on the market, so I'll explain why in a little bit. But once this gap right here fills, we'll project out and possibly see a reverse from that point. So I'm going to leave this in place just like that, so you can track the progress and see with your own eyes how accurate technical analysis is, especially when you're using candle charts. Okay, let's take a look at the Qs. This basically is the Nasdaq market. It's the power shares. And you can see here that I drew the lines lower. I think we're going to go a little bit lower right here on the Nasdaq. And I think we're going to bounce off of that 20-period moving average. So I'm going to draw that moving average out a little bit. And I think we're going to bounce off of that line just like that. So keep your eye on the Nasdaq. It's a little bit oversold right now. That moving average will act as a support level, and we'll have to see how that plays out. Now, interestingly enough, the Russell 2000 is a more broad-based index. And last week, I drew this little diagonal line here, basically indicating what I thought the 20-period moving average would do. I said that the moving average would start to turn up, and that's exactly what's happening. See this blue line? Remember, last Friday, none of this line was here. I drew that as a forecast for the 20-period moving average, and I drew this as my forecast for the Russell 2000. I think the Russell 2000 is going to continue lower. Unlike the other markets, this more broad-based index I think is more bearish, because on Thursday right here, the 7th, we see a bearish engulfing pattern. So I'm going to leave this line in place. And I think the Russell 2000 is going to drift lower to eventually bounce off of that 20-period moving average. Now let's talk a little bit about the weather, because in comparing weather forecasting to stock forecasting is very interesting, because here is a weather chart. And like I said last week, my degree is in aerospace, so I know a lot about weather, and I forecast the markets. The general stock market and the major indices are very, very similar, because when we're looking at a chart, just like we did before, I normally look at volume. Like for the S&P, you'll see that we are tracking direction on the S&P, but we're also tracking the volume. You see here? So when you have a green candle and you see increase in volume, that's telling us that in that direction, the buyers are coming in with force. And that's almost like measuring the wind on a weather chart. And so this is very much what the forecasts are showing. I'm actually right here, this little blip right there. You see that little? That's actually where I am right now. Pretty scary, because we just came out of the Keys. My in-laws live down here. I'll draw another one. They just evacuated out of their home. They may not even have a home next week. I pray to God that they do. But this is an amazing thing. What I noticed about the weather forecasters is they are failing to really disclose what's happening with another Cat 4 hurricane, which is out here, and that is Hurricane Jose. And what they're not talking about is the effect that this hurricane is going to have on Irma. So my forecast is that this line right here, this forecast, is going to go even further west right here and eventually come into the panhandle right there. I think that these guys actually have it wrong, and I'll put that out for the record. And so that's because there's an outside force affecting this existing force in this hurricane. So they're not talking about Hurricane Jose as it affects the current disaster that's on the horizon right now. So when I talk about the weather, please transfer that information to the stock market when you are forecasting your own stocks. You have to look at volume. You have to look at the direction. Remember that forecast line we saw in the weather chart there? That's basically the same thing in what you're seeing in the 20-period moving average. If the 20-period moving average is tracking upward, chances are the market is going to follow that tracking point. And the volume measures the force behind the move, just like we measure wind and pressure in the atmosphere. So I know it might seem a little odd, but I also find it very interesting that there's so much in common with the stock market, and I hope that you continue to follow the market, guys, so you can learn about how to forecast for yourself. And as you learn how to read the charts, what happens is the charts actually become a very good risk management tool. Just like the weather, these forecasters are trying to mitigate or minimize the risk of life lost to really get people out of the way because they're forecasting the weather. In this case with the stock market, I'm trying to give you the trends so that you can actually position yourself ahead of the move. It's kind of opposite there, where you want to put your money in the direction of where money is going, and that's how you profit in the stock market. So thank you once again. Please continue to pray for anyone who you might know in Florida, my friends, my family. Please continue to do that. I appreciate that. We can use it, and hopefully I'll be able to broadcast next week and not lose power here at our headquarters. We'll continue to track that as well. So have a good weekend. We'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.